Yo, what's going on, guys? I'm going to be going over divergences today, and there's not like a right way to play these, but they can definitely give you more influence in your setups. And I don't really use divergences that much, so if there's anyone who does, who sees that I say something wrong or something like that, then correct me. But I'm going to be going over the very, very basics of divergences and kind of why they help influence the setup. So mainly I look for divergences with NQ and ES. So right now I'm on NQ and MES. And obviously you can look for divergences with the Dow too, but I think that gets a little complicated. So sometimes you might see a divergence that with the Dow, like you get a lot higher and a higher low on the Dow, but maybe you get a lower high and lower low on the on NQ and ES. So in this situation, I'm going to be showing you guys kind of a interesting divergence right here. So right here, this is where price lines up. So let me just zoom this in a little bit. So this morning right here, we have a divergence. And why is this a divergence? Well, on ES, we create a higher high, and then we create a lower high. And so actually, I said that wrong. So we just create a normal high. So we're not comparing it to this. So we create a high, and then we create a lower high. And on NQ, we create a high, and then we could create a higher high. So that means this is a divergence because on NQ, we take out this high, but on ES, we do not take out this high. So already, this is when you look for a setup. So a divergence means that it shows like it's kind of like a volume anomaly. If you ever read the volume VPA analysis by Anna Colling or whatever her name is, it's kind of like that. So if you're looking for the 2022 model, and if you don't know what the 2022 model is, then you should definitely watch ICT's content or join my Discord. I think I have a picture of it. But basically, this is when you look for the 2022 model. So now that we have a lower high here, but we have a higher high here, maybe you look for a short right here because obviously this is going to be weaker than this, and we already took the high right here. And in this situation, after you take out this high, you see we get a tiny fair value gap right here. And this is very, very tiny. Let me move this down real quick. And so this would be a short. And let's see if it was in. So it just hit premium, okay? Just went over the 0.5. And you can see on ES, we tapped the order block and there was no fair value gap. So in this situation, if you see a divergence and you see a market structure shift, so here would be your market structure shift down. Why would this be a market structure shift down? Well, you can see we create this high, we create a higher low, and then we break below the higher low. And what else do you see? On the higher time frame, we're not even close to discount. So when we get close to discount, that's when you would look to sell. But because we're in premium in the higher time frame, it would still be a good short, even if the bias is bullish. Because if the bias is bullish, you want to see it go way under here for a long position. So there's multiple reasons short up here. We get a divergence right here. We get our 2022 model, so we get a market structure shift on both time frames, or on both charts. So we market structure shift, and then we get a lower high here and a higher high here. So this means that we took out liquidity on NQ, but we did not take liquidity on MES. And we have an order block here, and the reason why I like this order block is because there's a red candle, then a green candle, then another red candle. So those are the order blocks I like best, and they work the best in my opinion. And we have a fair value gap right here. So that would be your short, and your first target would be right here, and then maybe you leave runners until discount, which would be way down here. So you'd probably sell somewhere down here. I'm not sure exactly where discount is. I'm not going to take the time to draw it, but again, you're looking for the 2022 model after you see divergence, and the reason why looking for these models with divergences are more high probable without divergences, because it's just that kind of anomaly idea. So on one index we took the high and the other we didn't, so it kind of shows that we're going to get a nice move after that. That's my perception of it. Maybe that's wrong, but like I said, I don't really use divergence as much. I don't really see the need, but I know a lot of really good divergence traders, and I've definitely seen them with very, very good setups off of divergences. And you can look for divergences on any time frame. So obviously this is the 1 minute time frame, and we get this, and then we get this. So this is the 1 minute time frame, but you can look at like the 4 hour or the 1 hour. Let's see if I can find any in the 1 hour real quick. And I don't really trade NQ that often, but I like ES better. It's all up to preference though. Okay, so right here we get a giant divergence. So look at this, ready? Here's the high on ES. It's a little right there. You can see we take out this high, and then here's the high on NQ. On NQ we do not take out this high. So in this situation, you wouldn't look for a long off the divergence, you'd look for a short. Why a short? Well, we get the market structure shift right here. We're in premium for the long, or we're in premium for the short, so even better. And we have a fair value gap right here, and obviously the best entry would have been there, but we never got it. And then NQ, same thing. We have our fair value gap right there, and we reject that fair value gap. We don't quite make it up to this one, but this would have been an insane entry. And a lot of people will be like, well, how do you know whether long or short with divergences? Well, if there is a divergence, that's when you look for, well, did we get a market structure shift down or up? Because usually you get one of them. And if you get a market structure shift down, that's when you look to short. If you got a shift up, then that's when you look to long, okay? And like, you wouldn't really look to, a lot of people are like, oh, why do you use divergences? They literally don't tell you to short or long. Well, in this situation, they do. And they make the setup more high probable, because if there is a divergence with each index, that means a good move's probably coming, which means like the market makers are probably setting up a move. So in this situation, this would be a bearish divergence, because the setup, it would just be a normal, you would just call it a divergence. You wouldn't really call it a bearish or bullish divergence, but I usually just stick to the word divergence because it's like an anomaly, which shows this took at the high but this didn't, so that immediately interests me and makes me look for a setup. And honestly, if this did take out the high, I would still look for a short setup. But let's say this didn't take out this high. Well, that's a whole different story then, because now we have low resistance liquidity, which means trendline liquidity, which basically means we are forming a trend line here. So this is going to be low resistance liquidity run, which means we'll have a higher chance of breaking it. But let's say this did take out the high, well, it'd still be shortable because we have a higher high, or a high then a higher high, which makes it a high resistance liquidity. So it would probably be less chance we run over that. So it depends on the scenario. Obviously in this one we get this market structure shift, we don't take out this high, so this is why this is such a good short, and it looks like the sell model with liquidity down here. But yeah, again, right here we have another divergence. We get a higher high but a lower high on Q, and what would this mean? Well, in this situation you would see, oh, this is bullish, but this is bearish because we break market structure shift here. And this is kind of different because in this one we break market structure shift down in both. But in this one, see how we don't really break market structure shift, or we don't break market structure, but in this one we also have low resistance liquidity, as I talked about before. We have that trend line forming, and what happens when a trend line forms? We usually break it. So in this situation, you'd definitely be looking for a short on this one, because this is weaker, because this made a lower high. And you wouldn't short right here. Like in hindsight, you'd be like, yeah, you short right there. But when we get up here, you don't know the divergence is formed yet, so you want to wait for a new short. So in this situation, you would see the divergence, and then you see this trend line forming. So maybe you short right here on this trend line break, rather than just shorting right here. And in this situation, we never got it, but this is a 1 hour BPR, and as you can see, we never retraced to it. but then we did retrace to this equal highs right here, took out those equal highs, and then we dumped, and then here's your target. So these divergences can definitely set up for a lot of examples. We ended up getting the entry over here, but then that was just like a whole new setup. I don't know if I would have taken this. I probably wouldn't have. But again, if you did it, your stop loss would have been out there and your take profit would have been down there. So there's a lot of different situations you can see these divergences used. Like in this situation, there was a trend line going up, there was an uptrend, and usually there's a broken. But in this situation, there's not really any trend lines to be broken. So, but this is definitely the one you would look to short, even because it is weaker. And yeah, so let me try to find one more example, maybe. So those both form higher. Okay, so equal highs right there. Where did my chart just go? Okay, I'm not sure what happened to my chart. Let me go to the 4-hour maybe. Okay, my chart just disappeared. Oh, I see what happened. It just went right there, which I have no idea why. Okay, so I'm going to go to the 4-hour real quick. This is going to be the last example I show you guys. And let me go to US 500. Okay, so we have this giant trend line right there. Okay. So right here, we take out the high in this one, but on ES we don't. So automatically this tells me ES is weaker. So I would short ES in this situation. We rejected a fair value gap over here, which is even more bearish. And yes, you could still, it doesn't, like, you can still take this, okay? We still have the fair value gap right here. So after we get the divergence, we don't really see a clear market structure shift in this. I'm sure there's one in the smaller time frame. But this is pretty bearish because, one, we have the divergence, we have the high and the lower high, then we have the high and higher high, and on this one you see equal lows, which is very bearish. So you see equal lows here, which is also bearish. You see fair value gaps in premium, which we hit. You see another fair value gap in premium, smaller, and this is also an order block. And again, I wouldn't really use this for entries. I would go to the lower time frames for entries, but you can see in hindsight, like, we reject this order block, we rejected this fair value gap, and we also rejected this fair value gap. And again, why would this be a divergence where you'd look to short and not long? Well, we rejected a fair value gap over here in ES, and we have equal lows below. So you got to find reasons. After finding the divergence, find reasons on what you should do and how you should play the divergence, because because that's going to give you the most influence. And in this situation, the divergence is up here. It's not down here, okay? If the divergence was down here, you'd probably look to long, in my opinion, because you're probably getting higher highs and higher lows, but then maybe you get a lower low and lower high in the higher time frame. So like in this situation right here, we have the higher high, or higher low, higher low, higher low, but in this we have a lower high, or a low low, I mean, sorry about that. And so this means we take liquidity in here, but in this one we don't. So that's when you look for a long setup, because we made a divergence in the lows, not the highs. And we also have low resistance liquidity, which means this trend line is likely going to be broken. And we kind of have it on here too. Sloppy trend line retest, but you can see how that kind of works. So if anyone has any questions, let me know in my Discord, but that's mainly what I look for in divergences, even though I don't use them enough. If anyone needs to correct me on anything I said, feel free to in the comments. But again, divergences definitely give you another point of confluence because it shows you a nice move is probably setting up. But yeah, I hope you guys enjoyed the video, and other than that, peace.